Hello everyone, how are you all? I hope you are doing good and I'm good as always. So let's talk about this is the third day, day three of our class. Let's go here. So since we stop right here, I guess, if I'm not wrong, there's a balances. I think we completed this. This is where we should stop, I guess. So what I thought is that maybe golden rules of accounting and modern approaches. We shall discuss this in chapter 2, unit 2, chapter 1. Okay, let's start from chapter 1, which is which is theoretical framework. Draw this, which is oh sorry, draw this, the which is theoretical framework. This is the chapter 1. Unit 1 is this chapter. This chapter's weightage could be around, sorry, could be around 5 to 10. Keep this in mind. More or less, mostly, if I'm not wrong, they might ask for true or false question, I guess, regarding concepts. We'll talk about those concepts only. So let's get started, okay? If you are bored, just let me know. Overview is procedure of accounting, generating financial information and using the financial information. If you remember, or let's say, we always talk about financial statements, but here they give financial information. What is this? Because financial information consists of every kind of information which relates to financial data. Financial statements consist of balance sheet, profit and loss, and statement of equity, changes in equity, and cash flow statement. And notes to accounts. These five elements. So this identification of transaction, we'll talk about that later. Okay, introduction. Once again, I'm telling you, I said material is the best thing for you if you summarize well by yourself. Okay, instead of me like brushing off and providing you the summary of a book. I will provide you summary of in around November third week. Okay. Instead of that, if you make notes by yourself, it is going to be amazing and it will be magical for you. It will be a little bit difficult for the time being, but results are going to be groundbreaking for you. You are definitely going to pass. Let's start with simple example. I skipped some part, but we'll discuss it later, okay? In the today's class itself. An individual invests 2 lakh rupees, 2 lakh rupees for running a stationery business. Okay. We always talk about stationery business. On January 1st, he purchased goods worth of 1,15,000. Okay. Since 1,47,000 during the month of January. So this is the month of January. He pays shop rent for the month January of around 5,000 rupees and finds that still he has goods worth 15,000 in hand. The individual performs an economic activity. He carries on a few transactions and encounters with some events. Oh my god, there are two things transactions, events. What is this? We'll talk about this later. Is it not logical that he will want to know the result of his activity? They gave by themselves. Oh, and it's the calculator. Okay. And from the next class onwards, bring calculator which okay. Even if you skip the next class, it's fine. From day after tomorrow class. I'm thinking of taking classes for every day or almost every day or alternative day so that I can prepare for CFNU myself. And you can brush up your concepts regularly. You won't be missing any touch of this subject. Okay? Uh, Apart from this, theoretical part is not much to explain, but I'll try to make this as simple as possible and with as memory techniques as possible so that you can just memorize them. From practical portion onwards, you're going to love this. Okay. If you hate me, it's fine. We don't have to hate anybody. So, if you remember, yesterday I gave you a format and told you to take a screenshot, right? Like trading account, profit and loss account, balance sheet, and radical lines. Okay. Don't worry, that is just the basic. We are going to revise again and again, and we are going to take those concepts again and again. But you are not going to miss anything. By the end of this entire classes, not this class, you understand how completely and comprehensible I'm covering this. Okay. So let's say this format is kind of, oh my God, goods in hand. What is this? Oh my God, I cannot understand anything. Uh, maybe let's try trading account here. Why trading account? Because there are sales and purchases. Okay, if there are sales and purchases, why trading account but not profit and loss or balance sheet? I'll tell you, no, you can have those, but you will know about this later. So prepare trading account, buy sales, sales has income has credit balance. Sales is income for sales 1,47,000. 0.47 lakh. Second thing, he purchases. Direct purchases and direct income comes in trading account. Purchases 1.17. Okay. How about he finds that it still has goods worth of 15,000. Is it not closing stock? No, I mean, I did not tell you anything about stock. Closing stock means the stock that is in your hand by the end of the period, specific period. If you have 20,000 worth of goods in hand, because, for example, you supply pens, okay? Uh, for inventory, by opening inventory means the stock that is carried forward from the previous year. Okay, we'll talk about that later also. Okay. For example, you purchased pens from XYZ and say and are going to sell to me. So you cannot always purchase 100 pens and sell 100 pens. Sometimes you purchase 100 pens and sell around 80. The remaining 20 is the closing stock. Closing stock is the stock that is in your hand by the end of the specific period. By closing stock. How much is the amount? 16,000. Let's say, shall we total this? Please bring calculators for tomorrow. I mean, I'm telling this to myself. 1 minute. 1,47,000 plus 15,000. 1,62,000. I'm doing this because I'm presuming you took uh, accounting in your plus one and plus two. If there is any student who is from the science background, just comment below the video. So how much is the balance in the So 1,15,000. Oh, sorry. Yes, one like okay, sorry, oh, sorry, I forgot sharp print. Okay, this is the rule. Sharp print is the direct express. No, I mean, sorry, keep this as for the timing. Do not forget this, sorry. Please don't forget like me. Okay? Just you should be very well aware of this. Since I'm parallelly explaining you, I'm missing some things. So far, it was gross profit is what did they ask? He wants to know the result of his activity. What is the result? Result means the profit. How can you say result is the profit? Just imagine. Just you are a businessman, you hired me, and you want a chartered accountant to explain you the profit. 1 minute, I'm just want to check whether my face is fully covered or not. Because in the last two videos, it was kind of hard. Okay. If you are a businessman and you hire me, you just tell me, bro, I want to know the result. Result, I want another result. What do you mean by result? I shouldn't get confused. It is obvious that it is about profit. Okay, let's say this is the explanation. First, I will go through this. Handing of 42 separate season event. Oh no, we haven't talked about even the transaction here. So let's skip this here. Now comes the definition of accounting. Yesterday we talked about why is accounting required because we wanted to understand the trace of money and we wanted to see the trace of money. And today we are talking about what is accounting, meaning of the accounting. Isn't it kind of confusing? I will tell you what is the meaning of accounting is the art of recording, classifying, and summarizing in a significant manner. And in terms of money, transactions and events which are, let's skip this here, of a financial character and interpreting the result thereof. There is so much thing to learn. You should learn this definition, okay? At least keep an eye on this definition. Let's say accounting. It is art. Accounting is the art. If you remember in your intermediate, there are two things, art or science, and accounts is combined as both. But according to the CPA means they are just like chartered accountants of USA. Okay, 1 minute, sorry. They're just like chartered accountants of USA. In 1961, they talked about accounting. Just write this in your white notebook. Okay, definition of accounting. Accounting is an art of recording, classifying, summarizing. Recording. What do you record? We generally record journal entry, right? We generally classify lecture accounts. We generally summarize trial balances and financial statements. This is the summary. This is what investors expect you to prepare. You cannot be like investor. These are the journal entries. You cannot just give them the bank statement and tell them investor go search by yourself. These are the transactions that a company has been made during the year. You know, you cannot do that. We summarize the accounts. We prepare the accounts. We summarize the accounts. Oh, this is exactly what they said. We let's use red pen instead. Comment on the below whether you want me to use red or black or any other color. Okay. Recording of journal entries. So, okay, it is an art. Accounting is an art of recording, classifying, summarizing, recording journal entries, classifying ledger accounts, summarizing trial balances. Accounting is the record of recording, classifying, summarizing. Okay, summarizing what? Summarizing what? That is the beautiful question. Summarizing, let's not say about what, because what means is events or transactions. These are what they are talking about summarizing, recording, and classifying. Summarizing how? First they told us about how. In a significant manner, important manner, in terms of money. Okay. Accounting should be made in terms of money. We cannot account anything else. Like, I'm getting bad examples. So, art of art of recording, classifying, summarizing. How? Significant manner. Sorry, just write this. How? Significant manner. And in terms of money. And in terms of money. Okay. What do you record? In terms of money, what do you record? We talked about how we record. What do we record? We record events or transactions. What do you mean by events or transactions? Okay, keep that as it. Which are what are events or transactions that are events or transactions that are of financial character. Events or transactions that are of financial character. And interpreting the result thereof. Interpreting the result thereof. Interpreting means understanding and coming into conclusion. This is whole new separate topic. Okay. Oh, my pen is one. Let me try confirm. Okay. Let's say again, what is accounting? Accounting means I remember accounting is journal entry lecture. SSS. What do you do in journal entry? We record journal entries. We classify lecture accounts. We summarize trial balance and financial statements. Accounting is an art of recording, classifying, summarizing. Summarizing what? No, they haven't told us about what. They told us about how. Summarizing how in a significant manner and in terms of money. Okay. In a significant manner and in terms of money. Of what? Events or transactions. Any events or transactions? No. Events or transactions that are related to which are okay. That are of financial character. Of financial character. That's one part. And interpreting the results thereof. That is the second one. This is a whole another thing of accounting phase. If you want to write like this, art of recording, classifying, summarizing, how significant, I'm sorry, significant noun, SM. Significant manner means, yeah, the very next thing you should get doubt about is it about money or is it about any other thing? It is only about money in terms of money. in terms of money. Now what? First question, how? Second question, what? Events are transactions that are financial in nature, that are financial character. Plus, sorry, plus interpreting was thereof. Well, on last time we talked about definition of accounting. Accounting is what? Accounting is an art. Accounting is an art. Art of what? Recording, classifying, summarizing. Summarizing how? In a significant manner. When we talk about significant manner, we talk about another thing. Another thing is in terms of money. First thing, Siddham. What? How question is done? Now the question is what? We record events or transactions. Events or transactions that are in the financial character, and interpretation thereof. So in part, at least, whatever I miss, you can just cover it up. And if they ask about definition, if you have to write anywhere, you just write the highlighted part. Let me highlight the part. Keywords are important. In theory, keep that. Sort of financial character in interpreting the result. This is obviously the most important one. Summary, art. Accounting is art of recording, classifying, summarizing in a significant manner. And in terms of so no matter what, you should not miss these words. If you have to write this definition somewhere anyway in the examination. Now let's get back to the first part. I think this is lagging, I guess. This is where they talked about. This is like crap. We don't have to discuss every other thing. This is mostly the. Okay, I will talk about this. I will tell you why you have to skip this. So, what is here? We have talked about events or transactions. Let's use the right. Right? See, this is lagging. Maybe somewhere it is in, the board is getting touched, I guess. Before talking events or transaction, let's talk about first transaction. Transaction means, what do you mean by transaction? We say transaction as we give money, we take money. This is a transaction. Yes, you are absolutely right. This system is called performance of an act. Transaction means performance of an act. Any other transaction, we are talking about business performance of an act. Business performance of an act. An agreement. Uh, what do you mean by agreement? Agreement in you getting contract act. 1871 or something, I don't remember exactly. Indian Contract Act, ICAI. So what is a transaction? Transaction is BPA, business performance of an agreement. What is an event? Event is, it is very easy. Consequence of a transaction. Okay. First, we enter into the transaction, and then the event is the consequence of the transaction. In this example, we have done in the very beginning. We have done in the very beginning. This entire thing is transaction. This entire thing is transaction. And this is the event because since if you have sold even 15,000 even 15,000 of stock which was not sold and it was remaining as closing stock, it would have been a transaction. Okay, transaction is a business performance of an act. What is the act of performance? We sell the goods. In here, since the goods of 15,000 rupees has been in the stock, which is why it is an event, a consequence of a transaction. Let's say here they give you a brief explanation. 42,000 is an event. Oh, of course, this is also an event. Okay, this and this. Also, having the inventories in hand is another event. Okay, yes, I am right. While purchasing the investment of money, paying blah blah blah. Similarly, a municipal corporation, this is another example. We can skip, but I will just go through this once. I will not explain this. Okay. Similarly, a municipal corporation got government grant of 500 lakhs for adult education. It spent 250 lakhs for purchasing so and so, paid 200 lakhs. Tutors and left balance with 50 lakhs. These are also events of transactions. That is enough for you. Just to skip this. Nobody's, we are in CA foundation. They are not going to ask these things. You should know what are these. You should be just able to classify briefly. This is also another not so much important thing. You can skip this. Please do not draw this in your ICM material. Okay. This is another definition, but the definition we have discussed is the most important thing. This is another definition. Okay. I'm not going to discuss these because these are a bit irrelevant. Not that you have to skip, just go through this. Whatever I say, skip. 1 minute. Whatever I say, skip. Just to go through these ones. If you have any doubt, you can text me or you can really skip. It's totally fine. So we have talked about in accounting definition, it is an art of recording, classifying, blah blah blah. Okay. So we are the next step is the procedural aspect of accounting. Here we have come here. Okay, this is where we are. So the first thing is generating financial information. See again here they have talked about financial information, not financial statements. See, generating financial information. On the basis of above definitions, procedure of accounting procedure can be divided into two things. The first one is generating financial information. Second one is using the financial information. Generating, creating financial information, and then using financial information. We talked about in accounting definition, there is a part called interpretation of results there. Remember? That interpretation is being called as using. You interpret. Okay. Generating. First, this is kind of what do you say? Just remember this. We don't exactly know whether they ask in the exam, but we cannot do it since you get 5 marks. 5 marks is good enough. If this comes and many people leave these topics, if this is in your exam, you just in the exams you just dance and thank me once. First generating, second using. Generating financial information. What generating financial information? There are some things. First recording. Oh my God, we have seen this somewhere. Okay, in the definition. And then classifying, and then summarizing, and then analyzing, and then interpreting. Oh, sorry. Yes, interpreting, and then communicating. The first two procedure stages are the process of generating information along with the preparation and trial balance are covered under bookkeeping, while the preparation of financial statements and the analysis, interpretation, blah 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 blah, blah accounting. What did they say? Oh my God, they said so much. This is bookkeeping. What do you mean by bookkeeping? We'll talk about this later. It will come soon. And this entire thing is, this entire thing is accounting. This entire thing is basically accounting. Okay. What is first recording? Recording. This is the basic function of accounting. All business transactions of a financial character as financial character. Wait, let me just take this. Eh, Sorry for wasting it. Recording is the basic function of accounting. Recording is the basic function of accounting. What is basic function of accounting? It is like the fundamental. We talk a few things to our friends, and they be like, they ask some stupid questions and be like, bro, this is a kind of obvious one. That is the basic function. All business transactions are of a financial character. Financially, just get used to these terminologies, okay? As evidenced by some documents such as blah blah blah, sales bills, passbook, salary, etc., are recorded in the books of accounts. What did they say? They say recording all business transactions, that is all business transactions that has financial character. What is financial character? That involves money are recorded in books of accounts. Okay. Recording is done in a book called a journal. This book may be further divided into several subsidiary books according to the nature and size of business. We'll talk about this later, okay, in chapter 2. So these are just briefly explained things. Classic classification is concerned with the systematic analysis. Systematic means standard analysis. Standard means uh, meeting the minimum requirements of recorded data with a view to group transactions or entries of one nature at one place, so as to put information in a compact and usable form. My God, there's so much thing. I do not understand. I do not understand a single. Me neither, bro. Classification means ledger account. What is ledger account? It is systematic analysis. Systematic analysis of recorded data. What is recorded data? Journal. Journal entry. Journals. Systematic analysis means analyzing systematically. Okay. I don't know how much to explain. With a view to group transactions or entries of one simple, like similar nature at one place. Per se, example, debtors of a similar nature. Okay. That is called ledger. This book contains on different pages individual account heads under which all financial transactions of similar nature are collected. They just repeated the same thing. Example, just skip this. Just read the highlighted part, okay? There may be separate account heads for salary, printing, stationery, advertisement, etc. All expenses under these heads after being recorded in a journal will be classified under separate heads in the lecture. Okay. Summarizing. What did we study right until now? Recording, classifying. Where are we studying? Generation of financial information, not analysis. Second one is it's using. Not using, we are just studying about the generation of financial information. Summarizing, it is concerned with preparation and presentation of classified data in a manner useful to the internal as well as external users of financial statements. This process leads to preparation of financial statements. So much thing to explain in here, but I'm not going to explain it because the amount of information is that is provided here is scattered throughout your CA course. Okay, but this is beautiful. I like how they have articulated preparation and presentation. What is preparation and presentation? In general, we prepare and present financial information, or more or less we say financial statements. But here they have mentioned classified data instead of saying financial information in a manner that is useful to internal as well as external users of financial statements. Okay, who are internal? There are two users of financial statements, internal and external. External means investors, government people, contractors, suppliers, etc. Internal means employers, management, CEOs. I mean, in management, bottom tier, etc. Analyzing is a method. Okay. We are talked about summarizing, right? Analyzing. Analyzing, the term analysis means methodological. I mean, methodical means systematic. It can replace with systematic. Classification, methodic classification of data given in the financial information. Data given in the financial statements or given in the financial statements. What is given in financial statements? The data is given in financial statements. Sorry, it's just okay. The figures given in the financial statements will not help anyone unless they are in a simplified form. Just if you just read the balance sheet, profit and loss, even in what, okay, let's not talk about vertical by sales, like 5 lakh 50 5 crore 52 lakh 25,000 in the notes to accounts. You check the notes to accounts. In notes to accounts, they say into this for a respective data. You and I can analyze and understand because we invest 5 to 7 years in here. How about a layman? How about an investor? They cannot understand this entire thing. They don't even know why and how sales come here. What do you mean by sales? What do you mean by revenue? They don't know about that. So analysis, it is a systematic classification of data. What is data? Whatever figures you have in the balance sheet is data. Let's say this. Oh, this is also nice. Data given in financial statements. Given in financial statements. Okay. The figures given in the financial statements will not help anyone unless they are in simplified form. If you cannot simplify these, they cannot understand the data because which it can be very raw. Interpreting. Sorry. This is the final function of accounting. It is concerned with explaining meaning and significance. Significant means the importance of relationship. Relationship, not that relationship, as established by the analysis of accounting data. The recorded financial data, because what is recorded financial data that you read in balance sheet in profit and loss is analyzed and interpreted in a manner that will enable the users to make meaningful judgment. This is what I keep on talking about. Meaningful judgment about the financial condition and profitability of the business operations. Who are the end users? Those are the end users are called stakeholders. Before we talked about internal and external users, those are the end users. So they can make meaningful judgment. They can make meaningful judgment about the financial condition and profitability of the business operations. Communicating. It is concerned with transmission of summarized, analyzed, and interpreted data. I mean, three, four, 5 points. Information to the end users to enable them to make rational decisions. Communicating means just communicate. Like how you are going to provide these information. What information? The information which is summarized, interpreted, and analyzed information to the end users to enable them to make their own decisions, rational decisions. Accounting ratios, these are the things, just read this at once. These are the things you come across in CA intermediate. Okay, they only explained you about this. So those there are two things. Let's there are two things. Generating procedural process of accounting, there are two things: generating and interpreting or analyzing or understanding or using. Generating and using. What do you generate? Generate or CSA. Okay, I remember. No, first one is I think CSA. Next one are recording, classifying, summarizing, analyzing, interpreting, interpreting, and interpreting and communicating. How do we remember this? Sai is a name plus Ram Charan, RC, South Indian RC square, summarizing, analyzing, interpreting, recording, classifying, and communicating. Okay. If this doesn't work for you, you can use your own mnemonics. Using the information, there are certain users of accounts. Earlier, it was viewed that the accounting is meant for proprietor or owner of the business. It used to be accounts is used by the owner of the business. It used to be, not now. But changing social relationships diluted, this is, let's skip this, diluted the earlier thinking. Since earlier businesses were simple and not scaled, probably that could hold true to those. Skip this. They just say basically they are saying earlier, earlier we used to think that accounting is for owners, business people. But now, due to social relationships, it is not what we thought it was. It is now believed that besides the owner or the management of the business enterprise, users of accounts include investors, employees, lenders, suppliers, customers, government, and other agencies, and public at large. These are called stakeholders. You get this in intermediate, if I am not wrong. For example, so you can skip this also. For example, if an airline company borrows money from a bank, buys oil from oil companies, sell tickets to the customers, has staff to be paid, and salaries to all these group of people and entities are okay, nice stakeholders in that airline business. They would like to know and understand whether the business of the company is going well and if there are any challenges to the company to run the business. Accounting provides the art of presenting information systematically to the users of accounts. Skip this. Accounting data is more useful if it stresses economic substance rather than technical form. See, do you see how it is lacking? Information is useless and meaningless unless it is relevant and material to the user's decision. What is material? This is kind of tough. We'll see a inter audit. You'll get into this topic. Let me articulate this better. In CA inter in audit subject, you are going to study about material concept. Just skip this or go through this advice for us. You can just write yes here so that you know what to skip. Just text me. Oh my god, this is entirely uh, crap. Like nobody's going to ask you how accounting has become. In 4000 BC, there's some Egyptian who started using accounts, and then there is what do you call? I forgot his name. Kautilya Arthashastra. In Chandragupta's kingdom, wrote a book named Arthashastra, which is also described how the accounting record have to be maintained. In we are in CA foundation, they are not going to ask this. But it is one key insight and Pacioli. Pacioli is the father of accounting, okay? Lucas Pacioli or something, I forgot his name. So Pacioli said that all entries have to be double entries. That is, if you make one creditor, you must take some data. You will understand this after this subject. It is very beautiful. But you can skip this. Nobody's going to ask you who is Pacioli, when did he born. Skip this page. We are into the very end of the chapter. There are 30 pages, right? Skip. Objectives of account. Systematic recording of transactions. First we say 1 minute. Why is systematic record of transactions? We said recording somewhere. Ascertainment of results of above recorded transactions. Wait. Basic objective of accounting is to systematically record financial and business transactions. That is bookkeeping. What is bookkeeping? We'll talk about this later. These recorded transactions are later on classified and summarized logically by the preparation of financial statements and for analysis and interpretation. You see, wherever you see there is analysis interpretation. AI. Keep this in mind. Just to get used to these terminologies. PFS, preparation of financial statements. PFS. So what is the I mean you get 5 marks straight question. What are the objectives of accounting? Objectives of accounting. First objective, let's say I will just give you one short form. Just to remember this. Just understand the concept. Basic objective of accounting is to systematically record the financial aspects of business transactions. Okay? Bookkeeping. Ascertainment of results of above mentioned transactions. Above mentioned transactions, which ascertainment of results. Accountant prepares profit and loss account to know the results of business operations for a particular period of time. Accountants prepare P&L. Basically, this accountants prepare profit and loss for a period of time, specific. If the revenue exceeds expenses, it is called business running profitably. But if the blah 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 blah, it is doing loss. The profit and loss helps in management. Okay, skip this. No, no, read once, not skip this. Read once. This is like common sense for you. What is the third point? Ascertainment of financial position. This they talked about here. They talked about P&L. Here they talked about balance. A businessman is not only interested in knowing the results of the business in terms of the things, not only interested, but also anxious to know what he owes liability to the outsiders and what he owns assets on a certain date. To know this, accountant prepares financial position statement popularly known as balance sheet. Balance sheet is a statement of assets and liabilities of a business at a particular point of time, not particular what? Not particular period of time. Not particular period of time, it is particular point of time. There is difference, we'll talk about this later. And helps in ascertaining the financial health. What does financial health of the business? So, okay, let's just go through this linear way. Sorry, I will make you remember this later. Providing information to the users for rational business making. I mean, suggestion making. Accounting is the language of business. Communicates to the financial results of an enterprise. Financial results of an enterprise. Two, communicates and communicates financial results of an enterprise to various stakeholders by means of financial statements. Okay. To know the solvency position. By preparing the balance sheet, management not only reveals what is owned and what is owned. This is straight up linked to this. But also it gives the information regarding concern's ability to meet its liability. Solvency. What do you mean by solvency? Which is not insolvency. I mean, a business with huge losses may end up being insolvent. Insolvent means liquidation of a company. This is exactly the like they want to know by preparing balance sheet. Management not only wants to know what owned and owed by the enterprise, but also it gives information regarding concern's ability to meet its liabilities in a short term liquidity portion and long term solvency portion. Okay. So what are the objectives? Objectives are past. What is P? Providing information to the users of rational decision making. Providing information. Objective is accounting objectives. Okay. Why do you prepare accounts? Basically, this is the answer for why do you prepare accounts. Providing information to the rational decision making of the people. A. Ascertainment. A means ascertainment. Okay. Ascertainment of results of A. Ascertainment of profit and loss balance sheet. Profit and loss means results of recorded transactions. Balance sheet means financial position of the business. Three things. Part about yes, solvency to systematic recording of transactions. Systematic recording of transactions. D. You know the insolvency. Insolvency means short term and long term both. Short term means liquidity portion, long term is solvency portion. This is brief overview. Functions of accounting. This is another topic. Functions of accounting. We have discussed objectives and now we are discussing functions of accounting. Let's complete this topic today itself. Okay. This chapter today itself. Oh my god, charging. Back phone. If you have any suggestions, let me know. Okay. So that I tell you not to give me any suggestions because I'm badass. Functions of accounting. We had talked about objectives of accounting. Objectives of past. Objectives of past. Functions means measurement. Accounting measures past performance of the business entity and depicts current financial position. Performance means profit and loss. Position means balance sheet. Past performance, current financial position. And forecasting. Accounting helps in forecasting. Forecasting means predicting future performance, future position. This is past, this is future. Predicting future performance and future position of the enterprise using past data. Okay. Decision making. First of all, measurement. Second, forecasting measurement. Accounting is about measuring past performance and past financial position of the entity. Forecasting. Accounting forecast helps in forecasting present past performance and position of the financial position of the enterprise using past data and decision making. Accounting relevant information to the users of advance. MFD. Comparison and evaluation. CC. Comparison and control. We'll talk about this later. Comparison and evaluation. Evaluation. Accounting assesses performance achieved in relation to targets and discloses means shows and discloses information regarding accounting policies. Just read this. You'll know about this later. You'll understand what is contingent liability, what is accounting policy, which is important role in predicting, comparing, evaluating financial. 1 minute. I'm sorry. Which is important in predicting, comparing, and evaluating the financial results. Comparison and evaluation. First, evaluate. In order to compare, we can explain this in detail, but I don't think it is very relevant. Basically, for financial statements, we generally compare. For example, you want to invest in shares. You don't know whether you want to invest in Reliance, or you want to invest in Adani companies. So you are confused. What do? You just compare the share value, market position, market capitalization, etc. This is where accounting is helpful. That is what they are saying for comparison and evaluation. Evaluation is predicting, comparing, and evaluating financial results. Control. We'll talk about control later because it is wholly another discussion. Government regulation and taxation. Accounting provides necessary information to government to exercise control on entity as well as collection of taxes. See, so if you want to remember this, if you remember ABCD, this is easy. C square, control and comparison and evaluation. D, decision making. E, there is no E. F, forecasting. A, B, C, D, F, G. generating or something government regulations. And there is measurement. This is how you can remember. Now we have come to bookkeeping. Basically, bookkeeping means maintaining of account. Basically, bookkeeping means recording and classifying the transaction. That's it. We are not even summarizing the transaction. Okay. It is first two steps of accounting. In bookkeeping, difference is the important topic. Uh, there is no much relevant topics here. Bookkeeping is an activity concerned with recording of financial data operations in a significant orderly manner. It covers, sorry, it, it covers procedural aspects of accounting work and embraces the record keeping function. This is our wrapper. Obviously, bookkeeping procedures are governed by the end product, the financial statements. That time financial statements may profit and loss, cash flow statements, balance sheet, including such and blah 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 blah. This is all bullshit. You can skip this. Just remember that recording and classifying is the only nature for bookkeeping. Here, wait a minute. Here, classification of bookkeeping. So skip this. We had talked about objectives of accounting. Objectives of accounting is past, I guess. I don't remember. ABCD. So objectives of bookkeeping is CA, Chartered Accountancy. Complete recording of transactions, ascertainment of financial effect on the business. It is concerned with complete, complete and permanent record of all transactions in a systematic and logical manner. Just get used to this terminologies. The financial effects, financial effects on the business, systematic and logical manner, SLM. Complete. Basically, they are saying complete. They are saying bookkeeping objective involves complete recording of transactions, ascertainment of financial effect on business. This is concerned with combined effect of all transactions made during the accounting period upon the financial position of the business. Okay. There is a difference between bookkeeping and accounting. Yes, remembers ascertainment of financial effect, which is balance sheet, asset complete recording on transactions, which is P&L. It takes into account the complete and permanent record of all transactions and systematic. How do you record in systematic and logical manner? This is so boring. So, sorry. A settlement of financial effect on the business is inverse balance. Skip this. Hmm. Bookkeeping is a process of, it is a process concerned with recording. We talked about recording. Process of summarizing also, summarizing of recorded transactions. Bookkeeping is confined to recording of transactions. Accounting is concerned with summarizing transactions also. Okay, keep this in mind. And also, I told you that record, summarize. We did something in here. Classify. First to our bookkeeping, and then the next, since from the next stage of procedural aspect of accounting, it is called accounting. It consists as a base for accounting. Okay, bookkeeping is the base for accounting. It is considered as language of business. We talked about this already. Financial statements do not form part of process bookkeeping. Financial statements are obviously. Basically, let me write this. Here financial statements are no. Here financial statements are yes. Here accounting base. Just write what I'm writing. Here business language. So that you get to revise in the last day. Here recording, here summarizing. Managerial decisions cannot be made. Decisions cannot be made. Decisions can be made. No, there is no subfield of bookkeeping. There are several subfields like financial accounting, management accounting. Okay, we'll talk about financial and management accounting later. Okay. Financial position of business cannot be ascertained through. Financial position means balance sheet. You remember I kept on telling you financial position is about balance sheet. It talks about balance sheet. Financial position is ascertained on the basis of accounting reports. It cannot be ascertained, it can be ascertained. Okay. If you talk about overall summary, this is record, yes, this is summarizes. It talks about accounting base, it is a business language. Financial statements cannot be made here, financial statements can be made here. Managerial decisions cannot be taken, manageable decisions can be taken. There is no subfield for bookkeeping, there is a subfield for bookkeeping. Sorry, accounting. Financial question cannot be ascertained here in the bookkeeping. Financial question can be ascertained here. Let's see. We have done with half of the chapter. I mean, 60% of it. This is the bookkeeping. This is accounting. This is accountancy. They are not going to ask you all this in examination unless they are drunk. What are subfields? We talked about subfields. Like in bookkeeping, there are no subfields, but we are talking about subfields of accounting. Okay, this is also important. There are many subfields of accounting: financial accounting, management accounting. Wait a minute. Social accounting. Sorry, cost accounting, social responsibility accounting, HR accounting, human resource. Let's talk about HR accounting. Human resource accounting is an attempt to identify, quantify. Quantify means measure. To identify, quantify, and report investments made in HR, human resources of an organization. What is human resource? It is there in CA uh, strategic management subject. Basically, it talks about everything about the employees and management of employees. What the amount of investment made in human resource and the accounting and the measurement of amount of investment made in human resources and report the investments that are not presently accounted for in conventional. These are not there in conventional accounting practices. Social responsibility is also relatively new. The demand for social responsibility accounting stems from increasing social awareness about the undesirable byproduct of economic activities. This is all bullshit. You just read this once and try to remember. There is nothing more to explain it. Cost accounting, it is more related to and relevant to CMS. The definition of cost accounting is not much relevant for you. Management accounting means it is concerned with internal reporting. Management uses this for internal, more like management information, MIS reports, management information system reports, etc. Internal reporting to the managers of a business unit. Let's talk about business. Business unit is in CA inter strategic management. If I tell you what it is going to go over for you. Just keep on reading. To discharge the functions of stewardship, planning, control, and decision making. Basically, in order to function planning, control, decision making, The management needs variety of information. Okay, the different ways of grouping information and preparing reports as desired by managers for discharging their functions are referred to in as management accounting. Various types of information and various ways of grouping these topics together, okay, can be referred to as management accounting. Oh my God, how are you people reading this? So annoying. Financial reporting is what we are going to ex- be of experts about it. It covers preparation, presentation, and interpretation of financial statements and communication to the users of the accounts, stakeholders. It's మా బిజీ ఉన్నా. Sorry. It is historical in nature. One minute. Financial account. We'll talk about finance. It covers preparation and interpretation of financial statements